Welcome to Africa Ascending, a podcast series looking at key issues affecting the African business environment and more specifically its impact on the insurance sector in Africa. Hosted by Afro-Asian Insurance Services and Africa Ahead, in this series we will be looking at everything from water regulations, currency devaluation and climate change. To access this podcast in other ways, we will be appearing on Africa Ahead at www.afapublishing.com, Spotify, and also on the media page of afroasian-insurance.com. My name is Liz Booth, and I'm the editorial director at Africa Ahead. With me, I have
Uday Patel, Chairman and CEO of Afro-Asian Insurance Services Limited.
Today, we're talking about climate change and its impact on insurers' behaviour in Africa. And joining us to discuss this, we have Philip Lopokoiyit, CEO of the ICEA Line Group, which is headquartered in Kenya and operates across East Africa. Philip is also chair of the Nairobi Declaration on Sustainable Insurance, now the second largest insurance association in Africa, with more than 200 company members. Philip has also worked across Western and Central Africa. We also have Ankit Kapasi, an experienced international sustainability consultant at DSS Plus Consulting. He was an early adopter, starting his sustainability journey back in the 1990s, and has worked in East, West, and Southern Africa. To start us off today, we have heard a lot about climate change. It's all over the media, and there is this clear need to keep the increase in global warming down to less than 1.5 degrees C. So it would be good to hear what is actually happening across Africa and what tangible impacts of climate change we are seeing on the continent. Is it the same everywhere, Ankit?
Thank you, Liz, for the question, and it's good to be here. I agree, indeed, climate change is having a global impact and definitely far-reaching impacts across Africa, affecting not just the environment, but also the economy. Environmentally speaking, Africa's ecosystems are some of the most vulnerable in the world. For example, desertification is rapidly advancing in the regions like the Sahel, where fertile lands are turning into deserts, pushing communities to migrate and also affecting the wildlife. We also have the lungs of Africa, the Congo Basin, which is at risk due to rising temperatures and deforestation, which threatens biodiversity, reduces the area's ability to absorb carbon. And then there are the coastal regions where rising sea levels are causing places like Senegal and Mozambique a lot of harm, threatening communities, threatening tourism, as well as the natural habitats of a lot of local wildlife. There are the coral reefs along the Eastern African coast, which are also dying off due to warming waters, which is a direct impact on fisheries, as well as the marine biodiversity. There's also, as I mentioned, a huge economical impact and quite significant for Africa. If I look at some of the sectors, the agricultural sector, which employs nearly 60% of the population of Africa, is extremely vulnerable to climate change. For example, there are droughts, particularly in East Africa, which are becoming more frequent, more intense, leading to crop failures and livestock deaths. I read some projections which show that the crop yields could decrease by up to 50% in the next 25 years, so by 2050, without major adaptation efforts. This will affect food security, and it will be a major blow to economies that rely on agriculture. In 2018, we saw the crisis in Cape Town when the city almost ran out of water due to the drought. Southern and Eastern Africa are seeing similar patterns, extreme water shortages across the region. Meanwhile, in West Africa, there are people suffering from more frequent and severe flooding, which is impacting infrastructure, homes. It is displacing thousands of people. Of course, Africa depends highly on hydropower, and the energy sector is also feeling the strain. So you see regular blackouts in Zambia, in Malawi. On the other hand, there is also massive potential for solar energy, but there's investment and infrastructure highly limited in this region. And then last, not the least for sure, in terms of health, rising temperatures are allowing diseases like malaria to spread in new areas, while floods are contaminating water supplies. increasing the spread of diseases like cholera. So, in summary, climate change globally, as you asked, a huge issue, but a significant environmental and an economic concern in Africa. Many African countries are losing, I read recently, up to 5% of their GDP annually due to these impacts. And this is only projected to get worse.
So can I just jump in here, Ankit, please? What you have actually talked about in terms of impact of climate change on the economies and the environment, would it be right to say that, in fact, the biggest impact is the social impact of climate change on, possibly, if I bring it into the context of insurance, the impact on the sector that does not take advantage of the protection of insurance?
Absolutely. I think it's accurate to say social impact is a significant part of sustainability, as we call it, one of the main arms as well. And the impact of climate change in Africa is perhaps, again, very significant, if not the biggest in terms of overall consequences. So while economic and environmental ones we discussed are severe, these social consequences, they tend to ripple through every aspect of life. And hence, it amplifies other challenges in Africa like poverty, inequality, displacement.
Just one more question before we move on, please. And that is, obviously, this is a topic that belongs to a future podcast. But do you think that climate change and the consequences of climate change are possibly responsible for some of the conflicts that are taking place in Africa?
Most certainly. I think as resources dwindle, the conflicts become more and more common. That's been the story of ages. As droughts, as desertification we talked about, irregular rainfall patterns, they occur more regularly. They reduce the availability of water, of grazing land. Competition over these limited resources intensify. This has been linked to conflicts in Sudan, in Mali, Nigeria as well, where disputes over land and resources have often turned violent. We have read this in the news. The groups in Boko Haram in Nigeria have been partially attributed to the economic hardship and the displacement caused by changing climate.
So, Philip, as Ankit was saying there's a lot of people who are not insured who are being impacted by climate change. But I'm wondering about those people who are insured. Are you seeing climate change being reflected in terms of insurance losses? And has that increased maybe the volume or the severity of those Nat Cat losses?
Thank you, Liz. And just building on a little of what's been said earlier by Ankit. Yes, just in context, 43% of the global weather-related losses are insured. So that leaves a huge protection gap, estimated at about $132 billion protection gap. And then if you look at over the last 4 years, the estimated losses arising from natural catastrophes is about $100 billion. And those are numbers that have impacted insurance companies. So yes, there certainly have been losses across the globe, and in particular in Africa, where a lot of the population are vulnerable. There has certainly been that impact. If you look at East and Central Africa, for example, the floods that existed this year, about 4 million people have been impacted by that. And if you then look at how many have been displaced, about 500,000 have been displaced. And there have been, well over 1,000 deaths. And in Dubai, for example, they had a whole year's rainfall. Africa has not been immune to these changes. And that's why it's important for insurers, as risk managers, as risk carriers to come together. And the Nairobi Declaration of Sustainable Insurance, which I chair, is a coalition of African insurers who are committed to sustainable development goals, and who are also committed to integrating ESG into their operations. And we have a vision of having $14 billion of climate cover by 2030, impacting 1.4 billion people. And we're planning and been working through to set up a climate risk facility worth $1 billion. And part of this is just appreciating that no single insurer, primary insurer, underwriter, or you need scale in order to address the catastrophe that impacts the continent and also impacts elsewhere as well. So yes, there has been an increase in the volume and severity of natural catastrophe losses over the years. Between the last 5 years, not only are we just seeing the impact of extreme weather impacting the continent, even climate scientists are now calling it beyond extreme. A large portion of that is absorbed by the reinsurance market, just reflecting the capacity. But also, this is where, as we say, that as NDSI, we're looking to see how we can mitigate that both within the primary insurance market and the reinsurance market, and to cover, the vulnerable, as it were, by 2030 through the climate cover. And this will certainly bring some challenges in terms of sustainability, primarily because those costs are high and they will tend to reflect unaffordable premiums if mitigation steps are not taken, but also to the extent that the risks crystallize and they become very high, there is a very high chance that the insurance sector will not take on some of those risks. So it is really imperative that we take on steps to mitigate those risks. ICEA Land Group, where we had a specific program to mitigate flood risks, including early warning systems, and also just making sure that our clients take risk mitigation measures. And it's important that these are all integrated with other underwriters so that those risks can be mitigated into the future.
Education always comes up, doesn't it, in these conversations, and educating clients on what they can do. I mean, do you think insurers have can they impose requirements on their insureds?
Yes, I think that's an important risk mitigation measures. Where risk surveys have been taken, specific actions will be relevant to clients, to individuals who have taken insurance policies, and it will be incumbent upon them to adhere to those risk mitigation measures. But those alone are not going to ameliorate this impact. There are other elements, including working together with public policy and in order to address that. So specifically, governments can prevent or can help put flood defense mechanisms. Also, in terms of building and land use policy, just discouraging investments in high-risk areas, riparian land, for example. And therefore, public policy and regulations is one element that would facilitate that. But also as well, when it comes to improving climate-related data and analysis, and in terms of predicting where some of these risks are, that's an important part of the initiative that one can use to mitigate the risk of climate change. And therefore, there's a whole portfolio of initiatives that will be very much relevant with respect to adaptation and resilience within the climate change impact space.
Ankit, do you get to see a lot of when you're doing your consulting work? Do you get involved in this? Do you hear from governments or from authorities that they are looking at this or is it just the insurance industry shouting in the wilderness?
Indeed. And this, of course, happens globally. If we speak directly about Africa, we see a lot of interest coming from government. In fact, we are working with the governments in South Africa, Lesotho, Mozambique, Botswana, where they are highly involved, knowing that climate risks will be significant to the local population, to the industry, to tourism in the area. So not just from an insurance aspect, but being ready for the future. They are investing in new technologies, new ecosystems for reducing impact through POPs, persistent organic pollutants, or UPOPs, the unintended persistent organic pollutants, through textile recycling, through composting, through paper management, waste paper management. So there is definitely a lot of increasing interest coming from government in a very positive direction in many parts of Africa.
I just want to state that this is still a journey for us. We announced at COP27 that vision. At COP28, facility was announced by AFDB, and that arose from an ideation process and the vision to have $1 billion. And that collation and execution of that process is still ongoing. So we will be getting more of that as it develops. But the idea really behind that is really the vision is also about impacting a 1.4 billion vulnerable people. And in that context, encouraging the takeover of insurance where it is considered uninsurable. So this facility will also just help to generate that supply side and the demand side and support that the demand side as well. There'll also be capacity building in terms of the risks that come through that and some of those capacity building in terms of knowing where we can mitigate is also going to take place in terms of also data and modeling. Those are important components of adaptation and resilience. But right now, the current facility is really biased towards agriculture, but we're looking to really expand that a lot more in order to make it a lot more broad in terms of climate change impact and initiatives. And more of that detail will be released within due course.
You've hit on technology and data a couple of times, both of you. And I'm just wondering whether the insurance industry is looking at things, alternative solutions such as parametric insurance, which obviously requires enormous amounts of data.
Yes, in the previous past, there's a lot of emphasis on what one may say as, peril-based insurance. And now we are moving towards, satellite-based and parametric-based insurance. And really speaking a little technical in that sort of word is that it's really about reducing the impact of or the mismatch between what's been taken as the insurance policy and the actual impact. And that's important with a lot of the parametric insurance and using data to estimate as close as possible what the risks are. And there are there were different modules that have been applied in terms of risk bases. We have the very large, what I'll say, sovereign index-based weather risk insurance pool. I'll name, Africa Risk Capacity as one of those that are involved in that. And they're looking to expand on that. And then, there are those that are based primarily on, the impact of extreme weather. And these, weather-based indexes, primarily based on satellite data. And the main purpose is really to reduce this basis risk, which, as I mentioned, is a mismatch between the coverage provided by the insurance policy and the actual loss incurred. In East and Central Africa, there's been one initiative, which is a livestock insurance, and that relies on parametric insurance, and that triggers payments when pastures come within a certain levels. And that enables the pastoralists to take the money and instead of waiting to really just get impacted by the drought and sell the animals, they can then, use that money early enough in order to be able to reduce the risks, but also improve and enhance their resilience. So yes, parametric insurance is going to be an important component going forward. Data and modeling are important parts of parametric insurance.
If I can chip in here, please, on my experience of, especially relating it to the burden that's being shouldered by reinsurers currently, we also are seeing that continuous burden of the increasing rates following the impact of climate change on reinsurers is not sustainable. They can't keep paying higher and higher rates. So we also are looking at structured solutions for them of a different way of buying reinsurance. So this is a consequence of the hardening of rates caused by the impact of nat cat losses generally at the primary end. So I think this is something that everyone is suffering, and I think I personally think that alternative solutions are required. But if I may just ask Ankit a question, Philip did mention that data is key. Has your consultancy firm actually been involved in collection of data and for application to the insurance market?
Thank you for the question. So, see, what you can't measure, you can't manage. So data management and gathering the right data and, importantly, analyzing that data is an important part of what we do as sustainability consultants. Not necessarily directly for the insurance market, but we do work pretty extensively on climate risk, climate finance, climate mitigation. And this is where we do collect data at different levels, at a company level, at a state or a regional level, at country levels, to better understand what this might mean as future projections of climate-related risks and disasters. So I certainly think there are some synergies over there.
This conversation clearly could get run and run and run. There's an awful lot more to say, and I suspect we could do a whole podcast series just on climate change and its impact in Africa. But Uday, perhaps I can just hand over to you now to sign us off for today.
Thank you, Liz, and thank you, Philip and Ankit, for your insightful contribution to this ongoing problem in Africa. If I may just briefly summarize the points touched upon. So we talked about, Ankit talked about the various sectors that climate change impacts. It affects environment, it affects economies, especially in Africa, where the impact is both on land and sea. It affects the agricultural sector, declining crop yields. It affects the power generation sector. Basically, the climate change has actually had an impact in various sectors where the insurance industry has a role of mitigation. Basically, Philip, you mentioned that 43% of global weather-related losses are insured. There is still a big gap which has to be filled of about $132 billion. Also, it impacts 4 million people in certain parts of Africa are impacted by floods. And what is good to hear is that there is a funding pool which is available by various agencies, which is there to promote development of relevant products. Currently, the burden is being carried by reinsurers. However, there are solutions. Where mitigation and adaptation is concerned, Philip, you mentioned early warning system, risk mitigation measures of insureds, and working together with governments and authorities to implement these mitigation measures. Also moving on to alternative solutions, data was key, modeling, quality of modeling was key as a prediction tool. The use currently in the agriculture sector of satellite and parametric based insurance solutions are available and even being developed. So I think all in all, we've had a fantastic session. Thank you both very much. And I want to thank our audience as well for their attendance. Remember, folks, at Africa Ascending, we asked the difficult questions in the hope of finding long-term solutions. I hope that you can join us next time. Goodbye.